So I'd like to welcome you all to this month's home buying seminar. And we're just going to go over a few simple things and processes surrounding purchasing a home. I have each one of my team members on to be able to share how important you guys are to us and your interaction with them and what their role is in helping you to become a successful owner. Hello, Miss Ford. How are you? Excellent. And I want to apologize in advance. My voice is kind of leaving me a little bit, so I do apologize in advance. But I'd like to welcome you all again. And what I'd like to do is give you all an opportunity to share with us what you're hoping to learn from the 45 minutes you're going to spend with us today. Anybody want to share? I like to have an interactive class, so anybody want to share? Or feel comfortable sharing?
Let's say all things mortgage.
All things mortgage?
Yes.
Okay. And I don't see who actually said that. Who said that?
Ms. Ford.
It was
Miss
Ford.
Okay, awesome. Can y'all see my screen?
Yes.
Okay.
Yes.
We're gonna go through these slides here pretty quickly because we only have like 45 minutes. But can you all share with us one of the reasons that you may be interested in home ownership?
I would say cost.
For cost? Is that one of the reasons you're interested in home ownership?
Mm-hmm.
Can you share more about that?
Yeah, so in the economy right now, the rental rates are just keep going up and up and up, and you're not benefiting from it. So if you can lock in a mortgage at a comfortable, amount that you can afford and not have that go up tremendously every year, I think that's important.
So kind of locking in that cost, huh?
Yes.
I love that. And we're going to go through these again just a little bit quickly, but these are just some of the things that we're going to discuss. So anybody have any other reasons that they would like to own a home or maybe buy a second home? Your reason why? No one wants to share? It's fine. It's okay. So here are some of the things that we're going to talk about. We're going to talk about the financial piece, one being credit. We're going to talk about your monthly survival number, cash reserves, your income, and then of course your debt to income ratio. So on the onset of preparing for home ownership, the first part is actually taking an application. So throughout our presentation, I'm going to ask my assistants to kind of share what their role is. Miss Larissa, are you ready to kind of talk about your role, honey?
Sure. Hi,
Awesome.
everybody. My name is Larissa. I'm one of Tomekia Hunt's assistants. I'm sure that I've spoken to either all of y'all or at least a good majority of y'all, at least initially. If not me, then Tomekia. But my job role is the beginning process, and I try to get an idea of what you're looking for. And then I like to explain the process of how we go about it in the beginning, just to give you an understanding and to know what to expect when moving forward. My goal usually for the first step, I like to get to know three things about the borrowers. I want to know if you're a first-time home buyer or not to get a better idea of what you're looking for. I like to get an idea of your timeline of when you want to secure a loan for a mortgage. And then I also want to get an idea of what your monthly budget would be for your mortgage. I like to get those three things because I want to know where we need to work within your parameters and with your comfortability, just to set the premise of what to expect from you. And then there, I like to explain what we do in the beginning. And usually, the first step for me with the borrower is to accomplish getting your application done. And there's a different couple ways that the Hunt team can do that for you. I can try to get it done for you over the phone. It takes no more than 15 minutes. And I'm being generous with the 15 minutes. It could be a lot shorter. or we can send you the application link if you want to do it at your own discretion. We can provide that for you as well. Or we can schedule a time that works best for you to take the application. But it's just basically getting your basic information, more importantly, your source of income, stuff like that. So once your application's done, the next step that I move forward with is getting your soft pull done. Now, I want to really explain the importance of when I say soft pull. We do a soft pull, not a hard pull initially. We do that because we're really not trying to mess with your credit score so soon in the process because you're trying to get a home. But we do have to get an idea of where you are. So once we have that established, we would then arrange a Zoom meeting with you, your realtor, and Tomekia, so we can strategize, set some goals, and make a plan for your loan. And while we do the part of doing your soft pull, your job at that point, once the application's done, is getting your supporting documents to us. That's going to be your main responsibility from there. You can upload it to your Blend portal, you can email it to us, but that's really a really important step because we'll be able to have your supporting evidence to get your pre-approval estimates as close as possible because we'll have everything on hand. So we like to have that preferably before the Zoom meeting. But that's really my goal, is setting up your loan, making your notes for your profile, and getting your credit score established. Because at that point, once I have you set up, I would then, per se, pass the baton to Stephanie to then pick it up from there and take you to the next step. So that's really my main goals and my job to help you. Did anyone have any questions about that by chance, in case I've talked to y'all before? Anything like that?
All right, so no questions. We're gonna go ahead and talk about the things that make up a credit score. Thank you, Larissa. That was phenomenal. I took some notes myself. So here are the things that make up your credit score. The new credit that you open makes up 10% of your score. The types of credit that are used make up 10%. The length of your credit history make up 15%. The amounts you owe make up 30%. And then your payment history itself makes up 35%. So new credit is when you go out and open an application. Let's say they offer you a discount at Ulta or Victoria's Secret, and opening up new credit can affect your credit score. Types of credit you use, that's your variety of credit. Like if you have installment loans, credit cards, a mortgage or car note, those are all different types of credit. 15% is made up by the length of your credit history, meaning have you had credit open for 1 year, 6 months, 6 years? Some of us are old enough to have had credit established over 30 years. So the length of time that you have credit established makes up 15% of your score. So it's important that you don't continually open and close credit cards. That when you get a couple of credit cards that you like, that you hold on to them. So you build longevity with those creditors, and it impacts your credit in a good way. 30% on the amount you actually owe. So you initially open up a line of credit, let's say a car note, any type of loan, you're starting at a 100% utilization. So as you pay that utilization down, it will start to impact your credit in a good way. 30% is the ideal number that you want your utilization to be. So if you have a credit card, you want to try to keep that credit card under 30% utilization. So a lot of times if you've had hiccups in your credit, you may have hesitation to reestablish new credit, but it's so important that you show the ability to pay your bills on time so that we can prove that you're going to be responsible as a mortgage holder. So if you have any credit questions at all, definitely reach out to us before you do things so that we can help you make the best use of your resources. Payment history, 35%. We help people all the time that have a missed payment. They have a repossession. They have a foreclosure. They have a bankruptcy. So there truly is nothing that can keep you from owning a house. However, there are time frames associated with all of the things that, all of the the decisions we have made in the past. So there has to be recovery times from some of the events that you may have had in your past. So if you've made a mistake or had a life event that has caused you to have to, turn a car back in, or maybe you were divorced and you had to file bankruptcy, or you were sick and you couldn't work, don't let those things keep you from purchasing a home. What's important is the recovery that you make. So you have to take the time to repair your credit, to get on a recovery path so that we then can help you become a homeowner. So our theme is that home ownership is for everyone. There is truly no person that cannot own a home if they're willing to put the work in and hold their job and save their money, or possibly even co-sign with someone else. So the home ownership is the American dream, and we all have access to it if we take advantage of it. I do apologize for my voice. Oh my goodness. This is a representation, y'all, of what they consider as good credit, bad credit, all of the things, right? So they're looking at 639 and lower as a fair or challenging credit, 640 to 679, and then so forth and so on. So honestly, you all can get into a home with as little as a 580 credit score with a traditional 3.5% down payment. If you have a large amount of money that you can put down, you can get into a home with a much lower score, even a 500 credit score. So if you are in the position of using down payment assistance, you have to have a 640 credit score if you are buying in Arkansas. And then in Texas, it's a 620 credit score for their down payment assistance. So I'll just talk to those two states right now because I think that's what we have represented on this call. So home ownership is available to all of us, and there are many tools out there to help that become a reality for you and your family. Does anyone have a question on credit at all, or any credit mishaps they'd like to discuss, or credit successes? Anybody have a success story? Not right now? Okay. All right, let's go on.
I do want to take a minute in case anyone doesn't or in case anyone does have any questions, please feel free to leave any questions in the chat. I'm trying my best to keep an eye on it, and I'll be sure to let Tomekia know if you do have a question, okay?
Thank you, Larissa.
Mhm.
I'd also like to point out to you all that your consumer credit report is available to you at annualcreditreport.com. It's free to you. You can make sure that you place disputes on errors that are on your credit report. If you want a more accurate credit score, you can use myfico.com. That does cost you money, but it does give you something super similar to what we pull for the mortgage credit report. And then like Miss Larissa was sharing with you, when we do your soft credit pull, it does not impact your credit score, but it gives us your exact score, it gives us all of the information, but it does not impact your credit score. So again, any credit questions, reach out to us. The next item that we look at, or in preparation, is you want to know your monthly survival number. So there are a lot of clients that we talk to, and I'm going to give Miss Stephanie a second to share what she does for the team. But we talk to people and they have a ideal payment that they desire, or a price range that they desire for their home, but they have not actually sat down to look at their monthly budget. So I always advise that you go back through the last 3 months bank statements, credit card statements, write down your bills and find out what it truly costs to live. What is your current rent? Do you have a car note? Are you in a place where you're taking Ubers to work? Like, what does your situation look like? What do traditional groceries cost you? So we're not talking about all of the extras and the vacations and all of those things, but what does it truly cost you to live if you had to reduce things down? What would it take on a monthly basis to cover your basic needs? This is something that you want to try to have set aside. This is what we call reserves. So reserves help you to finance a home. Reserves makes it look as though you have prepared and you have something to fall back on if you were to have a life event to occur. Maybe your car breaks down. Reserves helps you to get your car fixed so you're not going back into debt, with another credit card to get a car or to get tires on your car. So a lot of us are forced to make certain decisions because we haven't put up a few months of that monthly survival number. So that will help you have a more pleasurable home buying experience because you'll be able to relax knowing that, hey, I have 2 or 3 months of my payments kind of set aside so I can confidently purchase this property. And I know that I'm going to be in a good place to hang on to my home. Anybody on here keep up with the budget? Put it in the chat. All right, Miss Stephanie, would you like to share a little bit, honey?
Yes, ma'am. Hi, everybody. I'm Stephanie. I'm another one of Tomeka's assistants. My role is once Larissa passes the baton to me, I work closely with Miss Tomeka, Miss Kim, our processor, Miss Larissa, of course, as well as you guys, just to ensure that your loan application process goes smoothly. My goal and the team as a whole, our goal is to help and make the process as stress-free as possible for you. I handle a lot of behind the scenes work, like gathering the necessary documents, reviewing your documentation, calculating income, determining what kind of program would work best for you, and of course, working to try to get you pre-qualified. Um, like Larissa said, it's important to try to get your documents to us before our initial Zoom call. This will allow for me to do a quick review, and if we have all the documentation, it's possible that we could even have a pre-qualification during our first initial Zoom call. And that I feel like that's a common misconception, is that you can get pre-qualified just based off of your credit score and your stated income. However, we do need the supporting income documentation in order to verify that. Just as a note, throughout the process, we do have Zoom meetings. You'll usually notice me looking everywhere else except the camera. I promise you, I'm not trying to avoid contact. Or eye contact. I'm just trying to transcribe our meeting as much as possible to make sure that, our processor, Miss Kim, has as much information as possible, as well as our underwriting team. Do y'all have any questions for me?
That was
We
excellent.
do have some questions. So we asked earlier if we had any questions. Miss Michaela, she said she does, and so did Miss Cobb. So Miss Michaela, if you want to go ahead and ask your question, or if you want to type it out.
Can you come off soon, Miss Michaela?
Oh, she was answering about the budget. Oh, I see. So y'all were saying how you do follow
Oh,
your
she keeps
budget.
up with
You
her
and Miss
budget.
Cobb.
Awesome. And Miss
Yeah.
Cobb, do you have a question? Let me know, Larissa, what she says, honey.
Okay.
All right, so we have various loans for all borrowers. So with Cross Country Mortgage and our team, we have access to pretty much every loan program out there that could possibly be of use to you. We have conventional financing, FHA, VA, and USDA, just to name the basics. So that's just like the top level there, the basics. So if you are a first-time home buyer, you can buy a home with a conventional loan for as little as 3% down. FHA has a minimum down payment of 3.5% down. And if you are a veteran, if you have served, if you are still serving, and if you buy outside of the city limits in a USDA eligible area, those two loan types do not require a down payment. So for the USDA, though, those areas are normally going to be a little bit further for your drive to work, but they could work very well for you if you're a work from home person, or maybe you don't have children that have to be at all of the activities. So this slide is referencing buying down your interest rate. So this was a pretty big thing here recently because of the market, But now we're starting to see that interest rates are starting like to soften a little bit. They have not dropped as much as we all would hope, but they are starting to see a little bit of relief. It's projected they will drop more into the year of 2025. However, we encourage you to buy your home when you can afford your home. Do not wait for things to line up perfectly, because as the market drops, more and more people will come into the market. Prices will be driven up. So you may save a tinchy winch on your rate, but you're going to pay more for the property. And there will not be as much negotiating power because it will no longer be a good market again. It'll be a seller's market again. So you won't end up having the ability to negotiate as much as what we have today. This, go ahead, sorry.
I do want to say something that Ms. Cobb made a good point about. She was referring to the budget thing. She didn't have a question, but she did say, but let's be clear, inflation's making it impossible to save anything. What would you say to that?
I like that. I like the honesty. I like the realness. Some of you on here are individuals who are a single family member, one person in your home. You possibly even have a single income. So when you buy your house at first, it might seem like it's you're barely making it, right? You're paying your bills and that's all you're doing, because of the economy, because of inflation, because of interest rates, insurance, everything is going up. That's true. So in order to give yourself a bit of relief, the only way really to do that is to get a part-time job. That's the only way really to give yourself relief when you have debt that you cannot change. So I'll give you a personal example. I've been married 25 years. But when we moved to San Antonio 12 years ago, I had my second son and daycare was about $1,000 a month. And I was like, oh, okay. So daycare was over 2 times as much as when I had my first son. I was not prepared for that. We were not prepared for that. So what we were able to do though was reuse some money we had going to this place and shift it over to daycare for 3, 4 years, right until daycare is done. Then we could shift that money back. So if you have a place in your budget where you can shift some money, let's say you're putting money into your 401k, or you're putting money into an IRA account, or you're saving heavily, like $400 or $500 a month. Well, maybe you start to redistribute some of that money somewhere else temporarily. It doesn't have to be forever, but temporarily. Or you pick up some side job where you're able to kind of build up your cushion account, again, temporary, until you either like pay your car off, or pay off that student loan, or pay off that installment loan. So there are so many things that we see on people's credit reports that are 3 months from being done, 6 months from being done. And then as you pay those debts off, you think of, okay, now where's the next smartest place to put this $200 that I just freed up? But we got to plan in advance so that $200 doesn't go into, renewing that loan again or whatever it is. I love that idea, kind of using what you have, reshaping where it's going, and or picking up additional work. Like I've had to do in my life as a younger person, I picked up another job. My father worked 3 jobs like all my whole life. So a lot of us grew up where our family members, grandparents, they worked more than one job because it just was what they had to do. So I think that could be an option for a lot of us today with the technology that we have and the ability to maybe do a little part-time or something after hours or weekends. I hope that helps. So for your down payment assistance, there are down payment assistance programs. Again, I think most of us on here are in Arkansas or buying in Arkansas. So the most frequently used program we have is the ADFA DPA program in Arkansas. So part of Stephanie's job is she'll set that file up as Miss Larissa instructs her to do. Some of the down payment assistance programs, though, they do have credit score requirements, and they have limits on what debt to income ratio you can have. So you may not be able to purchase as much house as you would if you had your own money, but still, it's a great way to be able to get into your first home and then possibly use that home as a rental property in your future. So you might start right here, but then eventually you're able to buy another home, or maybe you get married, or maybe you get a different job, or maybe you finish your college degree and this or that happens, and there's more income that'll come into your home. So for most American people, we normally don't get pay cuts. We normally get some type of pay increase or a new opportunity in a different job role. So for most of us, we don't get a pay cut unless you've worked so long that I don't want to be a manager anymore. I just want to go over here and do this or that. So I know like my processor, Miss Kim, she's kind of experienced that where she was a team lead or a processing manager. And she's like, well, I don't really care to do that anymore. I just want to be responsible for myself. So that might be a time where your pay might change in a different direction. But for most of y'all younger folks, your pay is going to prayerfully just continue to improve. This is just a simple chart here to give you all an overview again of what the minimum down payment requirements are. Jumbo, this is a loan that is over $802,000. So this is on here, but of course, most people don't do that. You know, maybe if you're in California or Washington State or someplace like that, maybe even Dallas. But for the maximum conforming loan limit right now, it's $802,650. That's going to be the new amount starting for 2025. So anything under this number is called a conforming loan, and you are not in the jumbo pricing, which normally is a little bit more than a traditional loan for a first-time buyer. All right, let me go to the next one here. All right, so we're looking at down payment, and I believe this says 2 to 5%, right? So it's just saying when calculating your down payment, you want to also think about your closing costs. Does anyone have questions about down payment or closing costs? I'm going to go through a few things that are included in closing costs, and then I'm going to give Ms. Kim a second to kind of share what she does for our group. So closing expenses can be a home inspection, an appraisal, homeowner's insurance, attorney fees if you're in an attorney state, lenders and title policies, property taxes, and prepaid insurance. So there's quite a few things that are included in your closing expenses. And what we do is we go over all of these things with you before you even identify your property. We let you know what those numbers are going to look like so that you're not in the dark when it comes to what your total costs are. But we want to work within your affordability. So if you have access to your own funds, that's great. But if you don't, you're going to share that with us so we can try to get the proper assistance plan set up for your family. All right, Miss Kim, would you like to share a little bit with us, dear?
Hi, my name is Kim Cruz. I'm the actual processor for Tomekia Hunt and the team. Just real quick, I've been doing this since the 90s, so I have over 25 years of experience in processing. I've kind of stayed in that pretty much due to I do enjoy working with agents and buyers, and it's where I feel I'm most successful. My role as a processor is basically to take once the applications and disclosures are signed, it then is sent to me. And my goal from that point is to take it all the way to the end, make it a smooth transaction for you as best I can. I review the files when they come in. I order written BO verifications, request certain documents. We request title. We request appraisal when it's ready to do that. I work with the employers, and I go through with the agents, if I need a correction on, addendums to contracts, things like that. I work with the buyer on what I know that underwriter is going to want to see. I usually try to get with the buyers on what I have to have just to get the initial submission done and get it into underwriting to get its initial review completed and the approval done. So I work with the underwriters real heavily. I also work with knowing the guidelines and going in and reviewing different situations within our guidelines, what's allowed with the different programs. I submit them to underwriting once I get everything that I need. Once the underwriter reviews it, she'll submit it back with conditions. Then I will work with her, whether if I have to go through the guidelines, you know, to question a condition. Sometimes I do that. A lot of times I will work on those conditions of what she needs with the agents, with the buyers, with the employers, with title. And I will work to get those conditions in so that I can get it submitted back to her to get it clear to close. Once it's clear to close, then I take it to the closing team and I work with title and the actual closer to help facilitate and make sure that everything is prepared. The final numbers are prepared for the buyers so they know exactly what they're going to bring to the table. Any funding conditions that the underwriter put on there that I can help facilitate early, I do that. I work closely with the closers to help them with anything they need help with. If they need title sends in something and something didn't get signed, I sometimes will put it in the portal with the buyer to sign to help them facilitate funding quickly. I do work with shipping sometimes when they come back and an investor asks for a condition. So I'm kind of in from the time it's signed and the disclosures are signed, I could be in that file all the way through. I work with so many people involved, and the biggest ones are my buyers, the agents, you know, my team. But that's just a really quick synopsis of what I do. I'm looking at assets, I'm looking at pay stubs, I'm looking at all of this. If there's some kind of ordinary situation, I'm pulling up guidelines, you know, what's allowed, what's not allowed. So there's a lot that goes into what I do, and that's just really brief. But my vow to my customers is to stand in the gap for them, to help them do it as seamlessly as possible. It is stressful to buy a house no matter what you do, and it can be a stressful time. I try to make it as easy as on the buyers as I can. One of our big products that we have here is our fast track, which really felicitates a lot of things and helps us early on in the process. But one of the biggest misconceptions is that people will turn in documents, a picture of their computer with a pay stub pulled up. Things like that are not acceptable. So I have to help them facilitate what that document has to look like, how it has to come in to be accepted by the underwriting team and so forth. So one of the misconceptions I have is that particular area. I really have to work with people because they don't print those stuff, because we're in a day and age where everything is online. It's not, we don't have paper anymore. So that can be a bit testing in the industry. And I've watched it go from when I started in this business, FHA and VA were not automated approval. They were manual files, pure and simple. And everything was paper. It wasn't, paperless back then. So I've watched the industry go from being that way to completely paperless. And I've seen the biggest difficult, and even not in our industry, but as a challenge that buyers have, is they don't get, paper stuff anymore. Everything's online when they go to pull their information, a pay stub, for example, or their assets. Most of them don't have mail coming to them anymore. Everything's online or through their phone apps. So it can be very challenging in the way they will accept the documentation in those cases. And that's where I find that I have a lot of misconception I have to work through with the buyers as to what you can and cannot do. I think that is pretty much my goal. but I have always taken it a little further. I help the agents as much as I can to help the buyers and our team. So it is my goal to be here to help facilitate it as fast and as smoothly as I can. We all sometimes run into things, but usually we can work through it and we do it as a team. Here with Tomekia and Larissa and Stephanie, sometimes we will brainstorm on situations and find ways around things. So that's just kind of a brief on me. If you have any questions, please feel free to ask, but that's pretty much it for me.
Anybody have any questions for Miss Kim? Please put them in the chat, or if you're comfortable, you're welcome to come off mute. I'm going to talk to you guys about income here pretty briefly. If you see the slide before you, the top little yellow portion, it says, do you have a consistent earning history? That's a yes or no question. So our goal, Kim's goal, we have to show the underwriter that you have a consistent earning history. There's no like discrimination or anything, there is just flat out so simple. Have you worked consistently in the last 2 years? If you have not worked consistently in the last 2 years, what kept you from working? And are you back on track to having a consistent earning history? So many things about this business are common sense things. Our underwriters are very common sense. They have to follow guidelines, but if we can put the story together for them and share with them, hey, our client is a good client. Our client is going to pay their mortgage back. Here's why. So even if you are a student or a recent graduate from college and you have an offer letter to start working, well, you've been in a 4-year degree plan full time. Now you have an offer letter that matches with your degree plan. You're able to get a house right away because you have been consistent. You were earning a degree and then you earned an offer on a job. So you then do not have to be at that job 2 years because you've already shown your consistency. If you are self-employed by chance, because we work with a lot of self-employed people, if you are self-employed, you need your last 2 years tax returns unless you have a large down payment to then use a non-traditional program. But if we're using a traditional program, again, consistency is 2 years. You need 2 years tax returns, and they need to reflect that you have earned an income that can cover your debts, your mortgage, and the leftovers. So the next thing that we're going to share is going to be an overview of your debt to income. And I know that a lot of us have heard this phrase, debt to income. How much debt do you have versus the income that you earn? So for your income, we use your gross amount of income. If you are an hourly employee, it's important that you don't shortcut your week, that you're working 40 hours a week if you don't have a really, really high earning potential right now. 40 hours a week, you got to go to work every day. If you can't make it to work, you got to have PTO. So we want to make sure that we're able to get as much as we possibly can. If you have Social Security, we can count that. If you have children with child support, if it is consistent, we can count that. If you have children that have Social Security, we can count that. Now, when we're working with your children's incomes, those incomes must be in your name and they must have at least 3 years continuance. So your 18-year-old's child support, we wouldn't be able to count. But your 18-year-old's child support, I'm sorry, not 18, your 14-year-old's child support, we could count because they still have 3 years or more left in high school. So you got to have 3 years continuance on any of those incomes when we're using Social Security, child support, any type of benefit that you receive on behalf of a child. So the banks ideally want you to have your car note, student loans, housing note at no more than 43% of what you earn. Well, this is just hypothetical because We help people with way more than 43% of their income in their total liabilities. So at the end of the day, this is just an overview of what they desire. However, your situation may be different, and we may be able to squeeze more out of your income. So each application has its own outcome. Yours is not going to be like your neighbor's. Yours is going to be for you and your family. So this is just another quick tip that keeping your debt to income ratio low, it will help to ensure you can afford your debt repayments. It gives you peace of mind. So at the end of the day, the underwriters, the banks, they want peace of mind, but you should also want the same in your household, especially if you have a choice. All right, so here are the things that make up your monthly payment. So when you're buying a home, we give you your total monthly payment. Those things include your principal and interest. Those two things are fixed. Your principal and interest. If you have a fixed loan, these things are fixed. Your property taxes, your homeowner's insurance. These two things can change. Property taxes can be assessed on an annual basis, and your amount can change. Homeowner's insurance is updated on an annual basis, just like your car insurance, and it can change. That means that your overall mortgage payment can be affected periodically. So you always want to stay in close touch with us, because when you're getting mail and information that you need additional assistance with, we're going to provide that after close service to help you make sure you don't have any missteps, and that you're as prepared as possible. Mortgage insurance is something else that is factored into your home loan in the event you don't have a 20% down payment. Homeowners Association dues can also be a factor. Texas is a big homeowners association state. Pretty much every neighborhood has a homeowners association fee. Arkansas, not as much. They have something there called POA, Property Owners Association. So you'll find that in some of the newer developments, but it's pretty reasonable, like $10 a month, $12 a month. Those things can affect your total monthly outlay for your mortgage as well. Does anybody have any questions on the things that make up your mortgage payment? Miss Larissa, let me know if you see anything in the chat, honey. So as Miss Kim was sharing with us, she works with several different people as far as loan officer, me, real estate agent, your realtor, appraisers, attorneys, title company. Sometimes we have to call the home inspector. Normally we don't, 99% of the time we don't, but there could be something that comes up like a roof issue or something like that, and we have to get in touch with your home inspector. Your home insurance agent could also need your home inspection report. So we find that sometimes that, let's say the home insurance agent looks up your property and they see something in the system, maybe there was a claim from the previous owners, they may ask you for a copy of your home inspection report. But we're going to be there along with your real estate advisor to help ensure you have a smooth process. This is some guidance for your preparation time. Miss Makayla, you have something, baby?
Yes, ma'am.
Go for it.
When we are going through the process as far as like the ending loan process, is there a way that we can, like, if we already picked out the home and we're getting ready to close, is there a way that we can see like those disclosures, seeing like what has been done on a home, how many claims has been done on a home? We can go through that before everything initially, comes to pass.
As far as the home insurance?
Like, I don't know how to say, like, it's like a paper, it's like I think y'all call it disclosures, where it shows like before you typically buy the house, it shows like, were there any claims on the home? Were there any major accidents in the home? Like, I don't know if I'm saying it right, but I do believe like it'll show disclosures like, okay, what the previous owner had kind of like had to like repair or something like that. But
Now what you're talking about is the seller property disclosure.
yes, ma'am.
That's
Yes,
what you're
ma'am.
talking about. So do we have a realtor on here today? Miss Felicia, can you hear us? Okay, Miss Felicia is a realtor in Arkansas, and she would be able to better explain this. So I'm gonna do my best because I'm not a licensed realtor. But the seller's property disclosure is normally either provided when you make an offer on the house, right? They'll give you also the seller property disclosure, and that seller should share with you what they know about the home from the
Hi,
time.
Morgan.
Oh,
Hi, I'm so sorry. I couldn't find the mute button.
it's okay. It's okay. You want to share about the
Mm.
seller property
No,
disclosure?
yeah, you're exactly right. Exactly what you said. The seller's property disclosure is exactly what it says. It's supposed to disclose everything about the property of the seller, which includes the cost of their homeowner's insurance. Was that her question? Because I kind of got bits and pieces.
Yeah, I think so. But and
Mhm.
it also will
She,
share, for instance, let's say the hot water heater was replaced or air conditioner was replaced. So
mhm.
it's gonna share for let's see, what did I just have to have done? I had to have something done at one of our rental home. Anyway, but it would share what I knew about the property from the time that I owned it to the time that I'm transferring it to you. So the house I live in today is what's called a resale property. That means that someone else owned it before I owned it. So
Mhm.
and because of how we bought it, there was no seller property disclosure because the property was foreclosed. So there
Mhm.
was no property disclosure. So everything that happened in the house, there was no foretold story. So I'm gonna say, to answer your question, you might get one and you might not, because it's gonna depend on who owns the home. We have
Yeah.
another one that the person is elderly and they're being forced to sell their property. They've only owned it 1 year, and when they bought it with cash money. So they actually didn't even get a home inspection. So all they have knowledge of the home is 1 year. They don't even know when the roof was put on. So the people who are now buying the house is like, when was the last roof put on? Oh, we had to go back 2 or 3 buyers ago to figure it out.
Yeah. And
So
that's the
they
case
are,
with even investors as
yeah,
well.
yeah. So when
Hmm.
investors buy a property and they update it and they resell it, they only know for that 3 to 6 months that they've owned it, what's happened to the property. So your seller's disclosure may be complete or not complete, to be honest with you. And
Well,
that's,
they have to complete it and they have to attest. If they have no knowledge of
yeah,
it, they have to attest to that. And
I mean,
that's legally
as in
bounding.
like enough information.
Right.
But yeah, they have to do it according to the offer y'all requested on your offer. But that's why it's important to have your home inspection. So, like all realtors that I work with, they recommend you have a home inspection. That's for your protection. Does that help you, Michaela?
Yes, ma'am.
Okay, sweetie. So before you go to look for a property, it's important that we get you pre-approved, and that's where I come in. So meeting with your lender, we here at our team, we provide a holistic approach to helping you buy a home. We don't just have you stick your stuff in the computer and press a button and go. We really work with you. Like, we want you to know what you're doing, to be comfortable, and to have the best experience possible so that you can refer us your friends and family after you buy your house. And then you buy your next house, you're going to always come back to us because we took care of you. So our goal is to take care of you. And if at any point you feel like we are not living up to that, you should share that with us. Hey, Miss Tamika, I would like it if you all did this, did that, right? And if we can make that happen, we're going to make it happen for you. So pre-approval and pre-qualifications, two different things, and Miss Stephanie touched on it earlier, but being pre-qualified is just you all giving us your information. To the best of our knowledge, you're a go. Like, from what you're saying, you're a go. But being pre-approved is you're actually giving us your documentation. Now, if you haven't given us that documentation before we meet with you, all we can do is give you our best guess based on what you put in the computer system or what you told us and we wrote down. But when you actually give us your pay stubs, when you give us your tax returns, when you give us your W-2s, when you give us all of your complete documents, that is in your best interest, because we're able to give you 100% accurate pre-approval. And if we're unable to do that, we're going to talk with our underwriters. We're going to ask them additional questions. We never want you to get your hopes up for a property and then you do not close on that property. That's never our goal. We want 100% close on our team. So pre-approval positives helps you determine what you can afford. It helps you to have higher buying power. You're going to avoid setbacks and you're going to save time. If you save time, you save money, right? So important. This is just a quick list of items that most people need. Check stubs for at least 30 days. That is normally 2 to 3 pay stubs. Tax returns for the last 2 years in most cases. Assets, 2 months bank statements, all pages. And then we're going to do that soft credit check. Now down here, it does say that if you are self-employed, we may have to ask you for additional documents. If you are buying and selling homes, like you're selling one, buying one, we might need to get paperwork from the sale of another one. If you have, here's a recent one we've been experiencing, solar panels. If you have solar panels, there could be additional documents required for that too. So anything that pertains to your home, even after you buy your home, call your realtor, call your loan officer, because we're going to be able to help guide you as you make these big decisions about your home and how they could affect you even down the road. All right, I'm going to get through this extremely fast because we're running out of time. But once we get you pre-approved, you're going to find a house. From there, you're basically closing in 30 to 45 days, just depends on how long it takes you to do the negotiations. We work closely with our realtors. We have a great relationship and we put together an offer that works in your best interest. So if you have $3,000 or $5,000, just let's use 5,000. You say, Tomekia, I got $5,000. I'm comfortable using $3,000. Then that's what we need to make your offer work up to get you to that objective. Now, if it's not feasible, I'm gonna flat out tell you that's not gonna work. We got to rethink this. But if it's within the ability to use down payment assistance or ask for closing costs, we're going to do all those things to help you get into your first house, your second house, within the constraints that you have identified, right? And again, we're going to tell you, we're going to be honest if that just won't work. Applying for a home loan, again, we're going to make that application, which is going to be then a hard credit check. We're going to get everything prepped for the underwriter again. And at that time, we just want to remember the do's and the don'ts. Anything that has to do with your work history, your savings, your payroll, your investments, getting married, getting divorced, any big thing, you want to run it by us or share it with us. Hey, Miss Tomekia, I got an offer for a new job. Can I take this job? Most times you actually can take the job and still close on your house. So don't ever try to hide anything. And if you feel a little bit, I won't say prideful, but like unsure, should I share that with Miss Tomekia? Then you could say, Tomekia, I'm asking for a friend of mine. My friend, she is buying a house and she said that her and her husband or her and her boyfriend, they might get married. You know, do you think that might affect them? So if you're not comfortable sharing that it's your specific situation, say, hey, you know, I'm asking for one of my girlfriends, one of my boyfriends, and this is what's going on. We talked about the underwriting process, closing. So the big thing about working with us too is we're going to meet with you so many times, you're probably going to be sick of us. But you're going to know exactly what you're doing, exactly where you're going. You're going to have emails, texts, phone calls throughout the week, weekly, monthly. Like we're going to be doing all the things to make sure we're taking care of you, that no stone is unturned and that you get to closing successfully. This is just a quick overview of what a home inspection is and a home appraisal. I'm going to give you my overview of a home inspection. A home inspection is you going to the doctor and the doctor is doing a detailed annual checkup. They're checking your blood pressure and they're checking your eyes and your heartbeat. They took your blood. You know, you basically got undressed, right? That's a home inspection. A home appraisal is you did not get undressed. You basically, you got your makeup on, you got your hair, your nails, your outfit, and we're trying to see, well, how much are you worth? So it's an appearance-based thing. It's an appearance-based thing for the home appraisal. And they want to compare the home you buy to surrounding homes in the area that have sold within the past 6 months, maybe up to 1 year, depending on the area. So the home inspection is more detailed. It's more about safety and the longevity of the components of the home, like the plumbing, the AC, all of that good stuff. And then the home appraisal is basically, hey, is there any peeling paint? Are there any broken windows? It's all the exterior and what the eye can see without peeling back the clothes, if that makes sense. That's probably an interesting review, but we'll use it. Let's go with that. All right, closing cost. So closing costs can vary, right? Depending on your insurance cost, taxes on the property, how long we have to close. Are we closing in 30 days? Are we closing at the beginning of the month, the end of the month? So all of these things make up your closing cost. Some states have transfer taxes. Arkansas has transfer taxes. So when we're looking at your finances and what you have available, or what you can even get as a gift or from a family member, we're taking all of that into account to build out not only your monthly payment and purchase price, but what you can bring to closing or what you may not have to bring to closing. So we're taking all of these things into account to help you. We have not much time left, but does anyone have any questions that they would like to come off mute and ask?
We did have a question in the chat from Ms. Cobb. She asked, is it common for the seller to pay any of the closing costs or fees?
It is. It's very common at this time for the sellers to pay some closing costs, some fees. Those things are going to vary though, and it's going to depend on the nature of the sale. So how badly does this person need to sell? Is it a competitive price point? Is it a first time buyer price point where there are 6, 8, 10 offers going on at the same time? So it can be relative to the property and to what the expectation is or desire of the seller. So I do apologize. Let me turn this thing off. So what we do when I speak with your realtor or yourself, we're talking back and forth. I've given you a payment estimate. I'm asking your realtor, hey, did we call to find out, are there any more offers? How long has the property been on the market? So I'm working with your realtor to try to help come up with the best possible offer for the needs that you have. If your realtor says, Tomekia, they said it's already 6 offers on this house, we probably can't ask for much in closing costs. But if your realtor calls and they say, no, we have no offers, the house been sitting there for 45 days, we have a good chance at getting some closing costs. Great question, Ms. Cobb. Anyone else have a question? Anybody want to come off mute? Has anybody gained anything helpful today?
We're definitely getting some yes in the chat, and we're getting people thanking us for the meeting. And of course, we'll have a recording of this, and we'll send it to y'all, the link, once it's edited. So if y'all had any questions or want to go over it, we'll have that available.
We sure will. If y'all can think of any specific things that you all would like to discuss or you think would be best broken down into one individual meeting, please share those suggestions with us. We try to bring something to you at least every other month in a kind of a group setting, in addition to the times that we're meeting with you separately. For one, to educate you. The second one is to get you to be more encouraged and inspired to become a homeowner. The third reason is we want you to execute what your dreams are. So we want you to actually take action, to not just keep watching and keep making meetings and keep making excuses. We want you to actually execute, take action, believe in yourself. If you are currently paying rent and you're paying it on time, you more than likely can become a successful homeowner. So give yourself an opportunity to do this for you and your family. That's my advice to you. I believe everybody can become a homeowner. I know that they can. So if y'all have anyone that you want to share with us, by way of referral, for us to give them a call and check in with them and invite them to an opportunity such as this, please reach out to us and share those names, emails, and phone numbers. We'd love to reach out to them for you. Thank y'all so much again for being with us. Y'all have a blessed day. Bye bye, everybody.
Thank you, everyone.